So for this, may I please request Mr. Shankar Jadhav, Head Strategy, Bombay Stock Exchange, Mr. Anup Agarwal, Co-founder and CEO, Mintifi, and Session Chair, we have Mr. Vivek Patil, Partner, PwC, to join us for this session. Could you please join us in welcoming these gentlemen onto the stage? I'm going to now leave the stage to the expertise of our speakers. Thank you.
Thank you. It's a great pleasure to talk on a topic which is very contemporary, and especially with some of the industry veterans in this space, right? One of the reasons embedded finance is extremely close to my heart is because it kind of helps financial services organizations move from the traditional constructs of point of sale and point of service straight into the point of customer need, right? So it kind of takes the financial services closer to the customer into their daily and life needs. Having said that, while embedded finance is as a buzzword is very recent, the construct is not so recent as such. If you look at when you went for buying a house, you would always find a home loan agent there. If you had gone to buy an auto, there was always a loan agent as well as insurer over there. Right? So as a construct, it has been there for some time. What has happened in recent years essentially is that because of digital, you can actually take embedded finance to the next level in almost all types of customer journeys, be it your day-to-day journeys or your life needs, complex life needs as well, right? So what I'll do is I'll start with asking Anup. Anup, there are certain variations when people try to define embedded finance. You're in that business for some time now. Sure. How do you define embedded finance?
Sure. Thank you, Vivek, for having us here. Thank you, ET and PwC, for giving us the opportunity. Good afternoon, everyone. So yeah, you're right. I mean, this whole FOMO, I would say, about embedded financing, is it any different than when you would walk into a Vijay sales store and there would be somebody from Bajaj Finserv standing out there and giving you a 0% EMI financing for the iPhone that you were buying? It's actually no different, right? It was within the store, a guy was giving you an experience for not only buying the inventory, but also financing that inventory on top of that. A lot of those were physical in nature. What essentially technology has allowed to do that, and it's moving more and more rapidly towards that whole thing. Like, for example, if you look at Make My Trip, when you're buying the ticket, now you also have an option to buy the insurance on that, right? That's like, one way of saying there is something embedded into the flow, but effectively what used to be done in two different ways and two different flows, now it's all got combined into a single flow itself. When you're booking a Ola cab, you can actually also pay whatever 1 rupee or 2 rupee and get yourself insured for the ride that you're taking. Now, there are multiple such use cases that are coming today, not just restricted to finance. Finance, of course, has taken it in a very, very big way, and Mintifi has benefited from that whole experience that is getting built using technology into various flows of the B2B side or the B2C side. So as Mintifi as an organization, what we essentially do is work very closely with some of the largest of large corporate partners and embed the entire financing into their supply chain network. So think about as a distributor of a large company who's buying inventory from, let's say, Asian Paints. Now he has something called like a DMS, a dealer management software. Earlier, he could only place an order there. Now he could actually also take a financing from Mintifi for buying the inventory and make payments to Asian Paints directly through the platform itself. So these are various use cases that are coming up. I think there is no single definition, so to say, is this versus that. The whole concept essentially is centered around to say that what people call it is now lending or any kind of a financial services product, be it a mutual fund, be it insurance, be it wealth management, they've all become a feature within any other services that the customer is consuming today. The customer is consuming, let's say, an e-commerce, for buying an inventory. It could be a consumer durable product, and he's also looking for financing, which was earlier a broken process where he would do it in an offline manner. Today, he can actually do it in the same flow itself. So that's where the whole market is moving. It's becoming more and more efficient, more and more seamless, and we are seeing several such use cases coming out in the market today.
Thanks, Anup. Shankar, if you look at embedded finance, by default, it kind of unlocks cross-industry value chains, right? And essentially data from cross-industry right? Multiple parties. How effective are organizations as of today to use that kind of data? And how do you see that changing with the Gen AI paradigm and how, once it matures?
Thank you, Vivek and Anup. Actually, customers or as human beings are very lazy. If you give them everything where they are sitting, they'll be very happy. That's why when Anup said the customer delight, customers like it. And they want customers who can actually pay, who will not default, and who are really interested. So that suits well with a person with a mobile. So like if you ask the finance guys, go to some farmers and who don't really buy things and all, they will not go there because that's not where the finance is going to help. So it's not the customers that are poor that we are going to look at. If it's rich customers, they really prefer all these services that finance has. And I feel there will be a time when people will stop physically going to the places, especially in cities, and they'll do everything on their devices. Provided there are regulated entities like banks, etc., which don't ask for physical proofs. Aadhaar and the various other digital media has really helped us grow these financials. Like today you see in share market, the number of investors is huge. The daily transactions that people do is because of this convenience. But remember, 20 years back, we didn't have so much of digital technology available where authenticated people are available. Today, that is a totally changed nature. We are almost, everyone in cities is authenticated. They want to purchase, and this will go on much more. My only concern in this is, what's happening today when we are marketing is that one organization, as he mentioned about the ride people like Ola, Uber, they give permission without taking any permission. They take a general permission, we will share your data with someone, but without permission, they give the details to the various marketing companies, like for instance, any finance company. When that happens, your data is going everywhere without you knowing. And I think with the data privacy bill in it, this will stop. Because I don't mind having an app on my phone which does everything in a sandbox. But if that app is sharing things with others, it's a big, big issue. And in finance, when someone gets my data, it's a difficult time. Especially I'm worried about privacy. For instance, I'll give an example. You are having a relationship with someone which is not disclosed. When you pass, you buy a rose and deliver it to the person, the apps know, everyone knows. It's a data privacy loss. It's not only the financial loss that way. But except for barring this data privacy, I think it's a really big boon for customers who really want this service. And there are lots of new companies and NBFCs and banks and financial service providers who are meeting these customer demands. So today you'll see this is happening. There's another concern is we have UPI today, which is free. Most of the banking services or financial services come at a cost. But because it is free, the costs are so negligible. We talk about how we have Chandrayaan at the lowest price. I can assure you that the Indian service providers are providing these financial services at such a low cost, the world will wonder. But this is only available as long as the government has kept it free because someone is bearing that cost. That cost is just a couple of thousand crores or so. The moment the government removes that cap and if it starts charging, then you'll have a condition where some of the NBFCs already charge you if you pay electric payments, bill payments for instance. They charge you 5 rupees per transaction or as per the value, which is going to loot the customer. So I only hope that there is a regulation which comes in, which keeps the charges to an extent where the customers feel comfortable and not forced. Thank you.
Thank you, Shankar. So one of the early adopters, Anup, of embedded finance was the B2B scenario, right? The supply chain has been there for a long time. But most of the recent use cases that you have seen are in retail space, right? What do you see are pockets where you can kind of enhance embedded finance when it comes to B2B?
Yeah, I think for the longest time, that's always been a case that B2C seems to attract the largest amount of venture capital or the private equity money because it's all about consumers. There is so much of euphoria around, be it an e-commerce company or a car aggregation company or for that matter, payments company. So yes, there is a lot of innovation that is taking place on the B2C side. But having said that, I think we are seeing a significant amount of revolution taking place on the B2B side as well. Only yesterday we saw, in fact, a part of the sister company of Economic Times, one of the largest B2B company, which is off business, getting the Startup of the Year award. Now that was unheard of, right? In a B2B space for somebody to create a $5 billion organization in a span of 5 years is just humongous. And that's the kind of a thing that we are seeing across the board. The whole finance is just one element to it. But today what essentially people are trying to do is to say that anything where the ecosystem is already created, just think about it as like an enterprise and their supply chain network, or a logistics company which has a massive trucks and warehouses and stuff like that. All of those infrastructure always existed in this country. But what was essentially not happening was there was not seamless technology which could actually pull out the data, analyze the data, and provide solutions which were very custom built for each of the partners who were part of the B2B ecosystem. So a retailer who's part of a supply chain, his needs may be very, very different versus a distributor, may be very different from a wholesaler, and maybe very different from a trucker. We today are solving for use cases. For example, a logistics company having about 20 trucks. On a monthly basis, he has to change his tires, because about 20 trucks, he has to change roughly about 70 to 80 tires per month. Now, each of these tires cost about 15,000 rupees, so that is effectively like 4 to 5 lakh rupees of financing cost he needs to pay from his pocket or get it financed from a financial institution. How do you actually build those kind of experience fully embedded into his journey where, as soon as he is actually doing a transaction, now say, okay, we know for a fact that you've run so many miles, your trucks have already, the tires on the trucks have already worn out, you need to replace your tires. And not only you can actually buy those tires from a particular store, you can also get finance for those tires using the current flow in which you are already existing. Now, those are very, very personalized experience. And all of this is being possible today because there is technology, there is a lot of data which has become very powerful. And more importantly, there is also adoption of technology that has come in, right? I mean, 5 years back, even if you had an idea, you couldn't have actually executed some of those things because people didn't have smartphone, the internet penetration was poor. Thanks to the work that the government of India has done, there's just so much of data. And of course, on top of that, there's whole UPI, which is massively giving you the transaction data on the back of which you can build a lot of credit underwriting models. So I think what everybody calls it's a cliche, data is the next gold mine. And so far, you are able to access that data and analyze it in a proper way. I think multiple such use cases can get created.
So Anup, just to continue on those lines, right? How do you see more and more sophistication with GenAI kind of changing some of those dynamics, unlocking that data for you from the business perspective, right? If you can give 1 or 2 examples, that would be really great.
No, multiple Vivek examples. I think, the whole GenAI, I think a lot of this is still to be tested. There's a lot of excitement around what this GenAI is all about. Billions and billions of dollars are getting invested in this space. But clearly, I think GenAI would help to solve a lot of what we call it is an operational work that is being done today by humans, right? I mean, today in our own organization, for example, we have started implementing GenAI for a lot of things where they were human bodies. Now, somebody may say, okay, are you going to replace human bodies? Not necessarily, but you'll move up the chain because technology is actually going to help you to streamline a lot of operations which were earlier being done with low-cost resources and stuff like that. One of the very important use cases that we are trying to solve for example, is the entire customer care department, right? Today, you would have hundreds of customers who would be writing emails or maybe WhatsApp or maybe calling you for small little customer-related issues, right? Somebody may be asking for the statement of account, somebody may be wanting to understand how these calculations with respect to interest have got done and so on and so forth. Now, that's where the technology comes in play. That's where the GenAI comes in play, where it can actually give you an experience like you're talking to a human. You're not talking to a bot. Earlier, a lot of those experiences that were created was pretty rigid in nature, right? I mean, you still had the bot who could respond to some very standard FAQs. What is your name? Hi, I'm Ginny. Those were not very great experiences. And then eventually you had to speak with somebody on the other side, a human, for getting the response to it. Now, today what GenAI is essentially doing is because there is so much of data available and the way they have gone about building the whole architecture around it, you are able to very intelligently think through what should you be answering to them? It's almost like a human on the other side is solving for that problem. And that is where multiple such use cases are getting created, right? I mean, customer care is just one side of the whole thing. The second very important use case, earlier we used to have, and I mean, we continue to do that even today, we had a large data science team who would sit and make a lot of these ML models, the machine learning models, using all these new age, underwriting models like your coefficient regression and stuff like that. Today, you actually don't have to do a lot of those, what is called as feature engineering. The feature engineering is actually completely done by GI. So for your embedding all your information into a platform, the GenAI is the one who's actually helping you say, there are 50,000 data points, but actually not all the data points are relevant for underwriting. They are only about whatever 10, 20, 30 points, but how do you actually know which of those points are relevant and which are the ones which are not relevant? A lot of time used to get wasted in the past where humans would actually kind of make those models, keep doing back testing to see which of the ones are the, so to say, changing, what they call like a Gini coefficient, right? Whether you're seeing the delta on the underwriting quality that you are, trying to underwrite using the machine learning models. Now, all those iterative processes, you need not be dependent on a human to do it anymore. A lot of this will be picked up through multiple such data models, and they will eventually end up giving you what could be a perfect model. I wouldn't say perfect, but near about perfect model for you. So I think fundamentally, all of those processes which were largely human dependent, but were very, very monotonic, repetitive in nature, which was very mundane in nature. I think those are the kind of work that will certainly move to GenAI. And we are seeing a massive adoption of that already taking place in the BFI sector as we speak right now.
Thanks, Anup. So one of the things that kind of comes across is all these sophisticated analytical tools, AI, GenAI, are very data intensive, right? Data hungry. What happens when the Digital Personal Data Protection Act comes into play? What do you see the effect of that on the adoption of some of these tools?
I think it's an interesting question. Some 20, 25 years back, we had SEBI, which decided to digitalize the share market transactions or the capital markets. They went about slowly. Of course, the technology also had to develop that time. But they ensured that today, your share certificates are in a depository or your assets are in a depository. Only the transactions happen on the exchange and the clearing settlement takes on a different platform. So what happens is a person cannot take anything from you. You are assured. The same thing has to happen into finance industry. Today, the bank stores your money, the bank transacts your money, or even NBFCs, etc. We require that to change. The money should be somewhere else and transaction should be happening somewhere else. Similarly, the marketing should be done somewhere else because the human beings are at very big risk of losing. Though Anup mentioned everything works seamlessly, just imagine if in 1 million transactions, one transaction fails. Ask any customer who has faced this problem. It is impossible to get a clearance from those transactions. Whereas in capital markets, that doesn't seem to happen. You can see what happens when you don't get the monies or you don't get the share certificate. Ask anyone, has anyone suffered because of that? I don't think so. So the financial world where the banking or the payment side is there, we require to achieve that ratio as yet. What happens when something fails? I don't think they can do it. There is also in finance something called a transaction time. When I make the payment and the payment is received by the other party, there is a time in between. So your payment is gone from your account, but it's not been received by the other party. If it's lost in the cyberspace, it's almost impossible to get things done. These are few of the loopholes where people are very scared even now. And second is, as he mentioned very correctly, we are removing humans out of the network. Finance is like blood circulation. There will be a time when humans will be less and less useful, and people are just saying where it will end. I think human beings will have hardly any jobs but sitting at home and just imagining innovation and thinking innovation, and the machines will implement it. Financial world will be leaders in that because finance doesn't have anything tangible. It's all money in the bank, which is in numbers, which is everything. So financial world is the first place where digital will occur at a rapid pace. In fact, it is said that if humans do something correct, X number of times, and if a machine does it, in 2029, which is called the inflection point, where we will see that if you have a choice, you would rather employ a machine than a human. Even these payments, I don't know why the payments are required to be done. And they are still monopolies. Like you go to pay college fees, I think almost everyone will have children. School and college fees. They will have some apps, I don't want to name the apps. They will force you to go through that apps. We are in a UPI ka zamana, just put a QR code, I can make the payment. They don't want you to do that. And all this changes is only because some of the financial services, and pardon me Anup, you are also part of it and I am also part of it, they don't want to miss out on that skimming the market part. You should make money, no doubt. But that money should be saved, should be shared with customers, with the vendors, with everyone. I think we as BFSI sector have that responsibility to reduce it. I know insurance companies did not accept payments from online digital formats, for instance, credit cards. The government had to step in. If you have to pay an insurance payment and if you pay through credit card, you will not be put surcharge. They were behaving like typical merchants who would not like to pay that MDR. I think financial industry has to do that. That's what this new generation, they are saying, I am ready to do everything online. Don't charge me extra for it because you are saving money, time, efforts, and which we have to learn. Thank you.
Thank you, Shankar. I think the time is up, so I know the topic is such that we can go on and on. But just to summarize, I think the tools like AI, GenAI, from what I heard from both of them, will be very useful to kind of provide personalized experience and reduce risk and improve operational efficiencies as well. But there are constraints around data privacy. There will be impact of cross-industry regulation on it. So as well as the use of, more and more people will start focusing on responsible AI to kind of ensure that we use some of these tools very effectively, right? So thank you, Anup and Shankar, for the time. And
thank you once again for having us,
thanks,
Vivek.
everyone.
Thank you. Thank you.
Vivek and Anup.
Thank you, gentlemen. May I request you please come together for a group picture? Ladies and gentlemen, do you want to give them a little bit of energy and thank them for being here with us